Bulls who believe in Tesla, one of the top brands of electric vehicles, have been confirming high returns for this company, despite not being an investor. Warren Buffett has also predicted that Tesla will grow rapidly in the future and may even yield a return that is 10 times higher than its current stock price. Here's for Elon Musk. Jeff Bezos, Bernard Arnault, and Bill Gates, the 91-year-old investor, is ranked 5th on the Bloomberg Billionaires Index with his wealth. He is the chief executive officer of his investment firm and a master of all things financial. Why does Buffett believe that Tesla's future returns will be so high? To find out, keep watching. Really, in the 1950s, Warren Buffett worked as an investment salesman. In 1956, he quickly established Buffett Associates. Less than 10 years later, in 1965, he assumed control of Berkshire Hathaway and has since established himself as an authoritative figure on a variety of financial topics. Buffett follows a number of important guidelines and a globally recognized investing philosophy. After Elon Musk, Jeff Bezos, Bernard Arnault, and Bill Gates, the 91-year-old investor is ranked 5th on the Bloomberg Billionaires Index with his wealth. His most well-known accomplishment is that he is among the world's most prosperous investors. It follows that the legendary status of Warren Buffett's investing methods is not surprising. Berkshire Hathaway's solid year, despite growing global worries, is evidence of his approach. The company's shares rose by 15 this year. The S&P 500 has experienced a 6 at the line. Known for being a conventional investor, Buffett advised investors in 2017 to regularly invest in TFP 500 low index funds and to hold them through thick and thin, especially thin over time. The S&P 500, which comprises Microsoft, Apple, and Amazon, has continuously beaten inflation. This isn't the case for Tesla because of its extremely volatile shares. Buffett has, however, been known to acknowledge that what Tesla has and is accomplishing is very amazing, even though he feels that he is not cut out for competitive innovation. Even though he does not own any Tesla shares, he acknowledges that the company has only just started and has much more to come. Because in this point, he is entirely correct. For conventional investors, the stock is far too volatile. As of the end of April, one Tesla share was valued at over $1,000, giving the company a market valuation of $1.04 trillion. Right present, a share of Tesla stock is trading for $870. Given that this appears to be the stock's normal behavior and that it will likely increase again, investors are not too alarmed by this change. But why the confidence in the brand of electric cars? Tesla is only the 6th firm in history to reach the $1 trillion valuation threshold, and it is currently the 5th largest publicly traded company in the US. But it's a great fit for investors who aren't afraid to take chances. In comparison, Tesla's net income for the same period last year was $438 million, a 658% decrease to $3.32 billion. And the company's profit result is noteworthy since it surpasses its Q4 2021 net income numbers by about $1 billion, making it the biggest in recent history. The revenue and net income figures surpass the projections of analysts. Experts predicted that Tesla will generate $17.8 billion in revenue and $2.26 per share in profitability in the first quarter of 2022, according to Yahoo Finance. As we previously reported, Buffett predicts that Tesla will grow rapidly. Additionally, experts have confirmed that Tesla still has at least another 10 years of development ahead of it. The company is only now hitting an inflection moment where it will accelerate its rapid expansion, much like Amazon did after the financial crisis and the NASDAQ bubble. Some analysts have even projected that the current share price may rise by 1,000 in the future due to the expectation of much larger profits by 2030. Thus, we think Tesla is a wise investment, particularly in the long run. The rate of inflation has been rising over the past few months. The U.S. consumer price increase is 7.9% year over year, the most in 40 years. The biggest price increases have been in gas, then hotel, rental car, and furniture prices. Since the company's earnings and revenue should grow at the same rate as inflation, stocks are a good hedge against inflation. A stock market index called the S&P 500 is used to monitor the performance of about 500 American companies. It provides an overview of the state of the US economy and stock market by focusing on companies across 11 industries. The I-500's average annual total, which includes dividends, has been roughly 10 without accounting for inflation for almost a century. Because of this, the bull at Berkshire Hathaway suggested that purchasing an inexpensive index fund that tracks the SEP 500 is a better method for novice investors to get their feet wet in the stock market than selecting individual stocks. He thinks that investing in every CP 500 company at the low cost of an index fund would help the common investor. But stock market investment is much more than this, particularly if you're an aggressive investor and the goal is to produce wealth rather than just preserve it against inflation. The CFP 500 tracks the whole market and low-cost index funds, which typically have a low portfolio turnover but offer broad market exposure and low operating expenses, spread the risk of losing money in economic volatility. For instance, you would have spent less than $4 per share if you had bought in Tesla in 2010. The same shares have increased to around $1,000 per share by early 2022, even after the company's 5-for-1 stock split in 2020. Gains of more than 24,000% result from this. As a result, even though the business is still relatively new, Tesla is still among the best growth stocks to buy in 2022. Moreover, Tesla delayed disclosing its entire year of profitability until the beginning of 2021. According to Nicholas Colas, co-founder of DataTrek Research, Tesla is still in the early phases of its growth narrative, unlike the majority of other companies. In that sense, it's not like Facebook, Netflix, Apple, Microsoft, or Amazon. Despite having a sizable market share, none of those companies have as interesting growth story as Tesla's. For several reasons, the value of Tesla stock has increased dramatically during the past 10 years. It is the first automobile manufacturer, for instance, to start from scratch and achieve mass production in more than 50 years. In the first quarter, Tesla delivered just over 310,000 electric vehicles while producing over 305,000 of them. It is now on track to produce and deliver 1 million electric vehicles by the year 2022. The political and economic climate hasn't lessened investors' excitement for Tesla stock. This year's high-priced stocks have been negatively impacted by growing inflation, tighter monetary policy from the U.S. central bank, and the conflict in Ukraine as investors seek protection in more secure investments. The study claims that traditional Wall Street research consistently undervalues Tesla's several business lines, enormous scale, increasing profit profile, pioneering revolution in complex manufacturing approach to real-world AI, vertical integration, software stack, and much more. In a message to shareholders, the company declared, according to our multi-year investigation of Tesla's production capabilities and supply chain connections, Tesla is more than 6 years ahead of any competition, and this advantage is growing. If the analysts are right, then investing in Tesla stock can be done using Buffett's approach. And having shares in this incredible company would not only be one of the best methods to protect against inflation, but could also yield returns of 10 times or more. This suggests that buying well-selected growth equities would be the greatest strategy to combat inflation. Think of growth stocks similarly to how you would a bond. Bond investors should be particularly concerned about inflation since it gradually reduces the buying power of fixed-rate income payments. The same holds true for expected future revenue growth, growth stocks, or profit growth, because the higher hurdle rate lowers the value of future growth. Higher interest rates should thus have less of an impact on value equities than growth businesses. For investors who are willing to take risks and invest actively, Tesla might be one of the best stocks to include in your portfolio in 2022. In addition to surpassing Mercedes, Volkswagen, and Toyota in market value, Tesla is currently the most valuable car company in the world and among the top performing growth businesses of the past 10 years. Do you believe that the stock of Tesla will have returns as high in the future? Please leave a comment below.